we started gaining more traction when we tokenize points, primarily starting early last year, and then we started seeing pretty healthy traction around like YT and PT dynamics. I would think of Boros not too dissimilar to a perp. So if you want to set up a position on Boros, you would have to deposit collateral, and then with the collateral in place, you can long or short the rates. So with Athena, it's been a very synergistic, cordial relationship. They're arguably one of the best teams that we've worked with because they are so focused on their positioning, and they're very competent and they have the ability to execute well. We account for approximately 50% of USDE as USDE TVL, and in the same way, they're also a pretty significant portion, about 50-55% of Pendle's TVL.
All right, and we're live. Welcome to another episode of Bitcast. I'm your host, Jason Kam, aka @MapleLeafCap. Today is May 13th, 2025, 8 p.m. Hong Kong time. Bitcast is being live streamed to BidClub members. Questions are from the members and my own. Today I'm speaking with Tian, the founder of Pendle. Tian, welcome.
Yeah, thanks for having me.
Yeah, nice. We were chit-chatting before this. I really wish I bought it at 5 million. You should have grabbed me by the collar. But I think back then it was Eigenlayer that was most of the TVL, and then now it's Athena. I guess the first question, which is probably on a lot of the viewers' mind, which is, I was never quite sure how sustainable the demand and the supply of YT would be. And therefore, I was never kind of confident in the longevity of the model. It kind of always concerns me that with every maturity of the big sort of TVL wave, it will always make me nervous a little bit if I were a Pendle investor. How would you, as the founder, address this issue of the kind of longevity of both YT supply and demand going forward?
Sure. So we started gaining more traction when we tokenize points, primarily starting early last year, and then we started seeing pretty healthy traction around like YT and PT dynamics. With time, more data points emerge, and I believe that now the point speculation has become a lot more sensible versus when it first started out back in early last year. So what I'm seeing right now is that because there had been a lot more data points from the last 1 year or so, YT pricing is also a lot more competitive now. The premium attached to YT is not as significant anymore compared to, again, like Q1 last year. And more importantly, what we're seeing right now is that points have become quite an essential part, a go-to-market strategy for upcoming projects, especially the pre-TGE ones. Sometimes even the ones that have already done TGE, but they're looking to make, like trying to gain traction. For example, like Syrup, like they also have points in place. Athena is another good example. So, like from our perspective, points will be here to stay. But the onus is on us to try to look for opportunities that can enable us to retain liquidity to the best of our ability. So on average, I'd say whenever there is a maturity event, we would see about 30% of retention in the first 7 days. Usually, if we have good markets, the liquidity will continue to flow in over the next couple of weeks. So we have, like if you look at the Pendle TVL chart, it would go up and then it will come down at maturity event, and then it will continue to climb back up over an extended period of time. So the way we stay relevant is continue to be very thematic in our approach. We need to look for good opportunities. So for example, last year, aside from Eigenlayer and its ecosystem, we also saw very healthy traction with the launch of Athena pools. And then towards the end of the year, we also experimented with BTC markets, and that did fairly well. So we were able to capture like these opportunities, work with the top projects in that particular segment to try to stay relevant, and then of course like help them grow. this year we see a lot more interest around stablecoin and real asset tokens. So we have been very aggressively listing these markets to cater to demand. So when one maturity happens, at least there are optionalities for existing liquidity providers to roll their assets into. So yeah, as long as we provide a healthy and competitive opportunity, like let's say APY in a range of 10 to 15% for LP, for fixed rates, we would be a top of mind when it comes to liquidity provision and yield opportunities.
I suppose I hear you on the point that the TVL know that you exist. So when the maturity happens, they roll off, and because they're still aware of your platform, they look for other TVL opportunities and deploy, accordingly. I suppose the question is a bit more thematic, which is it's kind of hard to point fingers to what the next big thing is after Eigenlayer, and it just so happens Athena popped up. It seems like Athena has staying power. There's a lot of things they're working on. But invariably, that might taper off or that might kind of flatline. And if your token holders are looking for this continuous growth, I get it heuristically, the TVL of DeFi should be growing. But what gives you the confidence that, it will always kind of be this potential points and airdrop dynamic where you'll always be capturing an increasing share of the pie?
Yeah. So we have to keep improving our value proposition. So in the beginning, when we were much smaller, I would say we were trying to leverage on the hype of another project to try to grow our TVL. But right now, we have also realized that we are able to offer certain kind of value proposition that no other protocols can offer. For example, we've been very focused on getting PT assets distributed to as many venues as possible. Now, previously, the main offering for Pendle is to enable points to be tokenized and then traded freely. But on top of that, we recognize that PT can actually be a very, very good asset to be collateralized across money markets. So that's what we've been working on. Now Pendle probably accounts for more than half of Morpho's TVL, Euler maybe 20% or so, and then recently we've also got onto Aave with PT SUSDe and eUSDe. So in 2 weeks' time, the overall TVL hovers at around $800 million for these two PT markets on Aave. Where we see our core proposition here to other protocols is that because now we have healthy distribution outlets, if a protocol gets listed on Pendle and let's say they do well, we help accelerate their growth, we promote them to the prime markets, there's a good chance that the curators across different money markets can pick up these PTs, set up the markets, and enable certain kind of strategies to take place with all these different distribution outlets. And with that in place, then there's some dependency on not just Pendle, but also on the underlying. And then it creates a very, very synergistic relationship between Pendle and the underlying here. And yeah, it would help both our protocols grow and gain TVL traction. Yeah,
I can see that. Okay.
Yeah, so aside from just money markets, right, we also will have other implementations, for example, in our Citadel vertical, we want to get bridge PTs to other ecosystems. We also want to work with the likes of Athena to enable institutional products. So that will come in the second half of the year. But the broad theme here is to have better distribution for PT assets so that we can offer unique proposition to the underlying protocol and then help them grow. So it's not just a one-way relationship.
I suppose it's cool because there is a scale benefit to this, which is naturally the traders want the most liquid YT asset. So by having size, you get that. And then only when PD gets to a certain critical mass do all of these money market protocols want to onboard it as collateral because there's a liquidity. So I suppose that's a good argument.
I think
let's
go
ahead.
I was gonna say how we're looking at it is now because we have so many applications now, we try to at different stages of the TVL lifecycle, we try to be value adding let's say when a new market sets up, it probably has 100, 200K of TVL. So we would provide some materials for these protocols to market themselves. Once they get to $1 to $2 million in TVL, we would be more directly involved and then grow it to 10 mil. Like from 10 mil onwards, typically there would be interest from curators to get the market set up on Euler or Morpho. So with Euler and Morpho, the growth can continue to compound. Once they hit, say, like $1 billion, for example, then there would be a serious case for Aave.
That makes sense. And you did turn on permissionless listing through you, right, on March of this year. How's that going?
It's going fairly well, but I'd say like there are some aspects of the listing process that we can continue to lubricate. Right now, so we're not entirely, we allow for self-listing, but it's not a free-for-all kind of portal. Because with points, one of the more important components of it is that the points are tabulated off-chain and then distributed on-chain. So there's a lot of trust that needs to be present in order for the points program to be effective and mainly effective, right? So with Pendle, in order to get the market set up on Pendle, we need to know who the issuers are. So basically that means like we need to at least know, like it doesn't have to be a completely KYB, KYC kind of process, but we need to have someone to be accountable for the issuance of points. So whenever there's an interest, they would have to submit an application, and what we'll have to do is to get like the Telegram set up. And then we can guide the listing process, and the turnaround time target is around 48 hours. Like we're still maybe in the 3-day, 4-day kind of time period, but we're working very actively to reduce the time to get listed to 48 hours. And the last thing we want is to have many different random wallet addresses set up markets for, let's say, PT iUSDe, and they are unaffiliated to the official points issuer. And having too many markets, maybe with just 1 day apart from each other, with no guarantee of points, could be very dangerous for the end user. And that's what we try to avoid here with our listing process. I think we still have to go through several iterations to improve the process, but over the course of last month, ever since we really started to step up on our listing process, we have already seen about 25 markets listed on Pendle through the community portal.
The last month.
Yeah, the last 4 weeks.
That's versus a pace of how many, like before this was implemented?
Oh, before it was, because when we started up in March, the marketing wasn't done very right. So we probably had very minimal, in the range of like single digits. And we had to go out quite aggressively to reach out to some of these partners to submit their application. The most successful case that we have so far is actually OpenAiden, CUSDO. We helped grew the market to over $100 million in about a month. Now they're on Prime, and then we're also working with curators to get their assets listed on Morpho. They've already been listed on Morpho and Euler. Got
it. Regarding the sort of 3.5 to 4 billion of TVL today, I just want to talk through the numbers a little bit. Bridge me through between how that TVL translates to sort of the fees and revenue for the Pendle protocol, and then how it accrues to the token itself.
Sure. So Pendle has two sources of revenue. One is through the swap fees of the AMM. So PTYT trades will have a portion of that fees attributed to VE Pendle treasury. And then the other one is the YT fee. So YT fee is currently 5%, but what it means is actually 5% of all the yield that is generated. So let's say, using STETH for example, if the yield is 4%, that fee from Pendle is going to be 5% of that 4% APY. So it's actually not too significant to most users, but it actually makes quite a big difference to the VE Pendle distribution. Collectively, over the course of the last 12 months of fee distribution, basically from these two categories, we've distributed closer to $30 million in fees back to VE Pendle holders. Now, these fees consist of swap fees and then the YT component, which constitutes a portion of like points, and then they realize into tokens, and then we distribute the assets in kind. So the swap fees are actually fairly independent of the overall TVL. That TVL is where the YT 5% fee looks at. And yeah, basically with $3.9 billion in TVL, we estimate that the amount of fees that the underlying assets could generate probably in the range of 10 to 20%. And then of that, we take a small cut of 5%.
Okay. Yeah. And that 30 million is inclusive of the YT trading fee.
Correct.
Of the swaps. Okay. Yeah. Got it.
Yeah, of the swaps.
Got it. And then that on the 220 million sort of V Pendle staked based on the average yield is like 10-15%, but if you stake it over 4 years, you get to choose to like 25-40% just about. That's what you saw historically.
Yeah, historically, that's.
Are you raising your fees or reducing your fees, keeping to the level going forward?
We are optimizing the fees, and because like we only started with the fee optimization end of last year. We realized that we've been undercharging because compared to what the other protocols, like the other yield protocols were charging, let's just say like Convex, they would take somewhere between like 17 and 20%. Whereas like for Pendle, we were charging 5%, excluding the swap fees. So yeah, with respect to the other yield protocols, like we think we can be more aggressive in optimizing our fees without jeopardizing the trading activity on the platform. So ever since we started that fee optimization exercise in December last year, we've seen like fairly healthy traction. So the same amount of activity would give us 2 times or 3 times more fees relative to the previous period.
Yes, and sorry, and that 30 million currently you gave me over the last 12 months, only based in part of that lift in take rate.
Sorry, come again?
The $30 million you gave me on a last 12-month sort of revenue that accrues to Pendle V stakers only takes into account part of that take rate lift. It's not the whole thing. Right, because it only started in December of last year. So if you flush through the optimization of tick rate going from 5% to whatever, 10, 15, 20%.
Yeah.
Okay.
It could improve.
Okay, it could improve. So on the same $3.94 billion, you could be looking at $50 million, $60 million. Is that fair? Or is that too much?
I think potentially possible.
Okay.
But it will be very gradual. It's not going to be 2x like in a month. Yeah.
Okay, got it. Makes sense. And just so I get the right numbers, because the V Pendle to get paid in more Pendle or to get paid in USDC?
Well, so USDC is starting May. The distribution will be in the form of USDC. Previously, it was ETH. Yeah.
Okay. How do you feel like the SEC would feel about this?
So with the V Pendle distribution, actually it's not a free distribution. Users are required to vote for markets in order to be entitled to the fees. Effectively, what that means is if you have V Pendle and you do nothing about it, you don't get the fee distribution. You have to use the votes that you have, which is in the form of V Pendle, and then vote for the pool that you think would generate you the highest amount of fees. Let's say in the last couple of weeks, it has been iUSDe. So let's say if you pledge your V Pendle votes to iUSDe, on a weekly basis, in between epochs, whatever fee that the market generates, it will be prorated to the fee votes that you contributed to the pool.
Did you talk to Paul Atkins or anybody at the SEC about this design, or you kind of just talked to lawyers and they blessed it?
It was more so we didn't speak with SEC. We learned it from we learned it from the likes of VE Pendle, VE Curve was the inspiration for us, and then consulted legal counsel to structure a design that we think would make sense.
It certainly feels better now than before November of last year. I think that the users would prefer this, and I would imagine we looked at PenPy in the past, but do you see any sort of convex-like attempts in the future where it's kind of VE Pendle owned auto compounding through this USDC? Like, do you fund any yourself? Do you plan to? Do you see anything that's like legitimate? Yeah.
I don't know. That's really hard to say because.
Okay.
Yeah. No comments here. Like we.
No comments.
Yeah.
Okay. No worries. I'm just curious. By the way, that question is on every protocol founder's mind. We'll get more clarity, I think, by August or September of this year. I mean, Ethena takes up a big part of your TVL. I forgot what percentage it is. What can you tell us about that partnership going forward? There's a bunch of stuff, like their potential TVL ramp. There's a bunch of other things they're working on. There's SPV they're talking about. You talked about, the PT efforts. Walk us through your relationship with them and what's exciting on that front.
So with Ethena, it's been a very synergistic, cordial relationship. They're arguably one of the best teams that we've worked with because they are so focused on their positioning, and they are very competent and they have the ability to execute well. We account for approximately 50% of USDE as USDE TVL, and in the same way, they're also a pretty significant portion, about 55% of Pendle's TVL. So the reliance from both sides is definitely very, very present. We typically explore, at least for now, in the schemes that both of us are expanding towards, with Ethena, the convergence, the institutional products, we typically would partake in their expansion efforts in the same way with Boros. They have also an interest to take part in the products that we're going to build. So I would say right now, we're very tied to each other, and we need to make sure that we perform well together so that we can continue to grow.
In particular, on the PT effort, I forgot where I read about it, but the SPVs that the institutions they work with, can you give us a bit more color on what that effort is all about?
Yeah, sure. So with the institutional play from Ethena, it is more a partnership with Securitize, and then they announced that they will be launching iUSDe. So this iUSDe is basically an SPV, a securitized SPV, acquiring USDE and then issuing iUSDE that can only circulate among the whitelisted addresses. So what we'll do is we will have a KYC implementation of Pendle to service this liquidity pool. Not too different from Aave Arc, because it would be a very similar kind of approach. And
the buyer of that iUSDe PT would be similarly institutions.
As similarly as what? Sorry?
Institutions. They're KYC ML institutions. On chain, or are you going to put an SPV wrapper, so somebody on your team or some other team can kind of just start marketing to high net individuals or something, so they can start buying PTs directly through a hedge fund structure?
Yeah. So how we're thinking about it, and this is not the final form, but how we're thinking about it is to have KYC entities, whether individuals or funds, to be potentially to target or focus more on the YT purchases.
The YT.
But basically, yeah, YT. Because if we have a KYC implementation and we have like a DeFi implementation, right? Like there could be arbitrage opportunities that exist between these two implementations, and then someone in between can arb the markets and make the offerings more competitive.
Interesting. Okay, so do you expect this thing to be big at all, or is this kind of, second to all the other things that's happening?
I think initially the traction might be slow because people are just too used to DeFi, and then without having to do any kind of KYC and then participate in markets. So until we find, I think, to be fair, there is a lot of potential for a product like this, but it will have to go through a PMF search period. So the initial traction is likely going to be relatively modest, and once we are able to find like a specific use case for this particular product, then the growth can accelerate.
Okay. Well, in a sense, you're reliant on Athena sort of growing the iUSDe and the institutional adoption and sales of it. So, okay. So the ball might not be in your court. Okay, I understand. I wonder which one I should ask first, but maybe let's do it this way. Why don't you walk me through how Boros works? And not, I kind of know how it works. You pay fixed, you get floating, you pay floating, you get fixed. But would it be like the centralized exchange kind of order opening kind of way, or would it be like if I'm an institutional user, right? What would it look like? Do I have to deposit TVL as like a collateral, and then I have notional attack? Like, how would that look like? In terms of operational flow?
Yeah, I would think of Boros not too dissimilar to Perp. So if you want to set up a position on Boros, you would have to deposit collateral, and then with the collateral in place, you can long or short the rates. So the first use case for Boros is going to be the trading of funding rates, and we'll start with very vanilla markets on Binance. So the BTC USDT, ETH USDT markets, the rates will have to be published on chain by an oracle. For example, like Chainlink or Pith. And at the end of every funding cycle, when the rates are made available, then the settlement will take place. Now, so just to give an example, right, using Athena on their specific use case. So currently they would long spot, short perp, and then they're subject to funding rates exposure. This funding rate at this point in time is very volatile. Now, so when there is Boros, and let's say the funding rate is good, 10%, 15%, they can deposit collateral on Boros, and then they can short the yield on Boros for, let's say, until maturity. And then what that means is whoever takes the long side will have to ensure that Athena continues to receive the fixed amount of funding rate, let's say 10%, between the point of entry until maturity.
And the payment happens based on when the funding rate is calculated.
Correct. So the settlement, let's say the market settles every 8 hours. It will also be the case on Pendle.
How much leverage would one be able to implement?
So we initially will start with something that is a lot more modest, like say two times, but eventually we will definitely increase it. But it largely depends on how comfortable we feel about the system, and then we scale gradually. So to give some examples, we estimate in order to hedge out the funding rate exposure of $1 million worth of position, whether it's like BTC USDT or ETH USDT, the amount, and let's say 3 months maturity at 10% APY, the amount required is approximately $15,000. Because we're considering just the rates alone, independent of the underlying. So the capital efficiency, I think, is one of the more important propositions we have with Boros. And then if we couple that with higher margin factor, it can go even more efficient. But it's not going to be available immediately. We will have to use a couple of months to try to scale the system. And once we hit a sweet spot, then I think we can be more aggressive with the offerings.
So, sorry, just so I understand, like $1 million notional position over 3 months, it's 5%, right? So it's I don't know, like $50,000. You're saying that I can get the same level of interest rate exposure on Boros for $15,000 effectively,
Correct.
The whole million.
Yeah,
okay, because with
million.
the rates just doesn't move. Okay, and that will be enough to kind of hedge and move. But if it really moves violently, I have to top up more collateral. But it could get blown up very quickly. Interesting.
Yes. Yes.
Okay. And what kind of collateral would you accept? Would you accept? Yeah.
It will be very highly related to the market. Let's say if it's a BTC USDT market, then the preferred collateral would actually be, say, Rep BTC.
It'll be Rep BTC. Okay.
Yeah, or let's say if the market's ETH, then like it will be ETH.
Got it. Okay, but would you also accept things like SUSDe as collateral, or or PT as collateral?
Yes.
Yeah. Okay.
Yeah, eventually I think like we can also definitely consider like a broader variety of assets, especially if they are like USD denominated. Then I think there is a potential for us to consider those. But again, like it's not going to happen day one. We try to make the collaterals to be as closely related as the market that's getting traded. Stable coins will also be considered, but the long tail stable coins, I think like it will be something after.
Yeah, and how do you charge for something like this? The users who open up a position.
Yeah, so there will be maker-taker fees. Exact details to be decided, but that would be the primary. Yeah, that would be the primary source of revenue stream for Boros. And then on top of that, there will also be a component where yield gets charged as well. So similar to the YT fee that we talked about, of the fees that are of the yield that gets traded, like a percentage of that will be extracted by Boros.
I see. And just so I understand, because there is an oracle rate of the funding rate that exists.
Yes.
And does the rate that gets traded here, it can deviate versus the oracle rate that is live because of the just bid-ask position. And that difference, that delta, creates the funding in that period of time between the sort of the buyer and the seller. Okay.
Yes.
And you make your own markets, or would everybody be trading against like a pool of LP capital?
So it will be an order book. So we will have actually multiple ways to bootstrap liquidity. So firstly, we will be running a bot just to make sure that we have sufficient liquidity, baseline liquidity, to get started. And then we'll also be engaging a market maker, at least one, to launch this product with us. We don't have a lot of experience running an order book. We have some experience with V2 limit order book, but with something that is as new as Boros, we require external help. So that's why like we need the market maker to come on board with us. And then the last aspect is actually to have an automated market maker that distribute liquidity across the book. So let's say if you're someone who might not be too sophisticated and you don't know how to place order, whether long or short, like you can just put your money with this vault, and this vault will automatically distribute the set up positions across the book. So yeah, hopefully it generates like positive return.
Yeah. And on day one when you launch this, I guess in your mind, what kind of a notional position size should one expect to be able to open to hedge or to speculate?
I would think in the range of, let's say, like 400K to 600K for a start.
Notional,
Yeah.
notional or collateral?
Notional.
Okay, that's not that big.
Yeah.
Okay. But what's your goal in mind? Like, how? Because, I mean, some of these guys have, you know, $5, $10, $20 million position open on like long. They probably want to hedge the funding with a similar notional. Like, when do you think you get there?
So hopefully by the end of the year, we can service $40 to $80 million of daily trading volume. Notional. The
OI open at one time at the end of the day.
Yeah.
Okay.
Yeah.
By the end of the year, and how would that? Let's say if you get there, right? By the end of the year, every day there's like a 40 to 80 million of OI being opened, or just opening. It's just there. I'm guessing you'll be charging fees on that OI that's outstanding.
Yes.
How would that translate to revenue or fees to the Pendle protocol? Like, if you can just bridge that for me.
Yeah, by our very early estimation, it could probably translate to about like $2 million in fees.
Okay.
Yeah.
So if a 40 to 80 million dollar OI is maintained throughout the entire year, it would translate to about a $2 million in revenue.
Yes.
Okay. And this would be on a much smaller collateral base, like 40 to 80 million. Based on your math, it would be like, I don't know, a couple hundred K of collateral being put down.
Yeah.
Okay.
Not too big.
Yeah. In your mind, is this like because this is just this year, but like, what would the kind of metrics this have to do to make you happy? Because you spend all the effort here. Like, is this?
Yeah.
Do you start this effort because you feel like the TVL for Pendle itself hit a plateau, or do you feel like this is the next leg of growth that could really catapult the revenue? Like, in your mind, how are you thinking about the revenue potential here over time?
I think the revenue potential for Boros is very substantial because the amount of products that can be traded on Boros is not confined to just funding rates. And we start with funding rates because it is a concept that is quite like that is quite native to CeFi and DeFi, and people who are already like who've been in crypto space long enough would know funding rates quite well. So I think from our very early days when we were deciding between the different markets to focus on, funding rates appealed to us because every day there's probably $200-300 billion of that per volume, and every single one has funding rate exposure, and funding rate also powers protocols like Athena and Resolve and many others. So we think there's an opportunity for us to service this category of products. But on top of that, there's also opportunity for us to use the same instrument to enable the trading of rates for POS staking yield. For example, like ETH staking yield, those are fairly essential, but they are not very meaningful if you were to trade the rates on V2. Like we've had ST-ETH market, but because the band of fluctuation is so small, typically in the range of 3 and 4%, you need a big underlying in order to make meaningful return for something that fluctuates between 3 and 4%. So the capital efficiency is actually very important for rates of that kind, and we think Boros can serve this product category. Similarly, the same product can also be extended to borrowing rates, because right now I don't think there's a very scalable way to trade fixed borrowing rate. There are markets there, but they're typically more P2P. So I think Boros can also service that market, and then eventually, if possible, we'd like to see how we can use the same product to service use cases outside of DeFi and CeFi. So it could be a unique and niche rates, but I'm sure we can find something if like interest rate is a big market of $600-700 trillion. That's like, let's say, like a slightly longer term goal, but we start with something that we're familiar with, native to crypto.
This is still at least because I have to really play with it to understand, but this is still a pretty complex instrument because it has to do with it has a maturity to any sort of tranche. There's an 8-hour settlement period. You're not really just long the spot price. You're kind of long a strip of interest payments kind of over time. I guess aside from people who are speculating based on inside information, like, oh, this is happening, like it's gonna absolutely. Aside from those people, who are the natural participants for this market? You think that would contribute to that $40-80 million of OI?
So I think there are like a group of hedgers and a group of speculators. In the beginning, I believe the more sophisticated retail who are speculators would be the primary target audience. But eventually, once we get to a certain scale, then the hedgers would most likely start to take interest in the product. So with speculators, it's fairly it's like speculators are speculators. If there's money making opportunities, then they would be interested in the product. So how we need to appeal to this group of users, I think it would largely revolve around packaging and how we appeal to them. So one good thing about funding rate is that the feedback cycle is actually fairly short. So let's say if you have a view that the BTC USDT market funding rate would go up in the next 8 hours, you can actually express a view using Boros. You don't necessarily have to stay on until the maturity, even if it's like 5 months, 6 months away. So as long as you have a view that it's going to go up, long it, and then once you're in the money, you can realize the profit. So this is, I think, one of the main reasons why we wanted to support funding rates, because whether it goes up or it comes down, there are money-making opportunities for speculators to take advantage of. And then going to the hedger sites, I think the first category of users would be, like say the Ethena and market makers. They have delta neutral positions, long spot, short perp, and then they are subject to funding rates. If they short it, they can ensure the amount that they receive. And then on the other side, the natural longs, as far as we're concerned, we think options desk could potentially be a very suitable group of users, because when they sell options, they would have to hedge by longing perp. So they are typically the payer of funding rates. If they lock in on Boros, they are basically locking in the amount that they pay, so they are less susceptible to the funding rate volatility. So with this product, we hope to bring about like two types of hedgers alongside many different speculators to find a consensus in the market.
It's a very interesting product. It's necessarily more complex actually than the perp that we're used to. So I would imagine in the first couple months when it trades, like people are going to get fleeced, aping this way.
I think so. I think the first couple of months we don't have to focus too much on metrics. Like we'll keep a score of our progress, but the core effort coming from us has to be on helping users overcome that learning curve. So a lot of educational efforts and a lot of one-on-one sessions with funds or hedge funds that could find usefulness in this product. So I think this is something that we learned when we were building V2 in the early days. Because we're based in Singapore, and fortunately for us, there are quite a number of liquid shops and hedge funds in Singapore. We were able to reach out directly to these funds, schedule a one-on-one session, and then help them understand the proposition of Pendle V2. In the same way, I think we'll have to go back to that very, very basic stage of helping our potential customers or users to understand the product. And then from there on, we hope to be able to accelerate our growth.
Do you expect that sort of 1 to 20 to 1 to 40 type of fee ratio versus OI to maintain as you scale up the OI? Because like 40 to 80 million of OI maintained throughout the year translates to $2 million of fees. But if it's like 400 to 800 million of OI, is it then $20 million of fees, or should it go up or down, you think?
At this stage, I think it will be fairly linear.
Okay.
I think we'll have to see if that happens. That will be a good problem to talk about.
Understood. And I guess eventually you're going to go into alts as well, aside from the Bitcoin on Binance kind of thing. And you also talked about staking and other sort of esoteric markets. How soon do you think you will be doing those things after the launch of Boros?
I want to say it's fairly hard to give a timeline for the.
Okay.
So because a lot of it really depends on how the risk system is. Because like when we're dealing with a product that involves margin, liquidation is typically a big risk consideration. On top of that, like the entire product is going to be fully on chain. So there's also like contract considerations as well. We need to be able to manage these two components effectively before we feel comfortable scaling it up more aggressively. So we'll have to start with the very vanilla markets, and then over time, as we scale up, we can support more markets on, let's say, Binance, and then at the same time, more different venues. So once we, I don't know, like, hopefully not too long. Hopefully not too long.
If the liquidation of, because there's so many ways to go wrong, right? That the funding rate could be manipulated. Not that it's pretty complex, but let's say if it does goes through, let's say if liquidation does happen and you're left with a hole with collateral, who foots the bill of that hole?
So we, as much as possible, have to prevent that from happening. So there are multiple different safety procedures that we have in place to basically prevent that from happening. We don't ever want to get to a place where there's a bad debt and we need to service the bad debt using our own resources. So like kill switch, that's like the baseline. And then we will have to have automated systems to detect when there is a liquidation event that's happening. So instead of like, so one of the things that we have in place is to have a maximum amount of, let's say, rates movement. So it cannot go from, let's say, 10% to 1% in a single block. It has to go from, say, 10 to 9 to 8 in multiple different blocks, just so that our system has time to respond to these events. Yeah, so these are, I'd say, like we have a couple of that mitigation and precaution measures that we will introduce with the launch of Boros, and then we'll also have new concepts like margin floor that will be very specific to Boros.
But let's say if the worst case scenario were to happen, you'll be selling Pendle to pay effectively.
In the worst case, maybe, yes.
Okay, understood. So we kind of talked about two efforts that could really drive, I mean, pari passu, everything being the same. 4 billion of TVL could translate to 30 million of revenue now. It could be 50 to 60 if you lift the take rate over time slowly, with 2 million in addition to Boros if it all goes well. I guess there's something else I want to ask about, which is Solana expansion and TradFi, effort. Do you feel like that will be a good driver at all for you? And if not, then is there anything else that really excites you?
Sure. So with Solana, like it's an ecosystem that we've been looking at for quite some time now, because Solana traction is very, very meaningful, and we're definitely very impressed by the growth of the ecosystem in the last 2 years. We will actually start with Bridge PT. So basically minting PT on it, minting PT of the likes of Ethena or specific assets on Ethereum, and then bridge over to Solana and have it available for purchase or sale on Solana natively. The full implementation will take place a bit further down. So that is actually part of the V2 expansion that we still haven't disclosed too much info, but there are, so how we're thinking about expansion is, now we have V2, and then we're going to have Boros. So Boros is the new product that we're launching, but we also need to take time and effort to research and develop the V2 and make it even more compelling a product. V2 is not going to be the the end state, the current implementation of V2 will have to undergo improvements, and that will be something that we potentially look forward to next year. So with Solana, that is part of that expansion plan.
Got it. So like maybe some swap fees on PT on Solana accrual, but I'm not sure how big. Full Solana rollout with like, I don't know, like Cloud and Huma and those things would only happen next year, basically.
Yeah, with Huma actually, we are exploring ways to enable the rates to be traded. So that is under work, but it's not going to be like a Pendle full deployment on Solana. First, we will have to maybe do some form of bridging to enable the markets to move across, say, Ethereum and Solana.
So then that leaves us with the TradFi institution adoption. I guess you don't expect Solana to drive too much for your revenue. What about TradFi? Is that a big driver? And if not, then is there anything else we haven't covered that really excites you in the next couple of months or quarters?
Yeah, so again, I'm not so sure about the TradFi. I think my sentiment was something that I also mentioned earlier. I think the growth would be relatively modest in the beginning, but it is an important vertical for us to start getting involved in, because I just think in the future, maybe not too long from now, there will be opportunities in the real world asset segment, and I'd say like quite a bit of real world assets like tokenization would involve some form of institutions, KYC. So those are the hurdles that we need to overcome in order for us to fully capitalize on opportunities with that particular segment. Right now, while we still have some time and resources, we need to start going in. But we might be very early for these upcoming opportunities, but I think it's better to be prepared and be okay with low traction for maybe a year or so, and hopefully they result in meaningful return subsequently.
So not much from TradFi, but important for longer term.
Yes.
Is there anything we haven't covered that really excites you?
I think we've chatted quite a bit on aspects that excite me. I want to say I don't know how to express this, but I feel pretty good about Boros. But again,
there's something in there, because like there's a hurdle of nothing blows up, and this is a very different product than Pendle itself. Exciting product. There must be something in there that gives you the hunch that the optionality of this revenue potential, it's far bigger than the sort of $2 million guidance you kind of just gave.
Yes.
What is that optionality, you think? Like, is there something that you talk to clients about that they're like, this makes you feel like this is really going to pop? Like, what is that exactly, you think?
So I think $40 to $80 million. Okay, again, I don't know how to explain this. But
Sure.
I think there is a fair shot that it can do a couple of $1 billion in trading volume a day. So
Couple
maybe
billion
2
dollars,
years.
notional.
Yeah. So it's going to be a pretty big leap from the 40 to 80 that we estimate for this year. And I think the addressable market is what excites me first and foremost. And because of that, the revenue potential, I think, can be quite immense as well.
I suppose it is because the perp market is such a sizable market, and the funding rate remains something that people just take but have no way to hedge out over an extended period of time. And
Yes.
by talking to all the traders who kind of want to pay a small, like they kind of want to just hedge it, you feel like the opportunity is there. You're just going to create a tool for them. Interesting.
Yeah.
I guess it's complex enough you don't feel like the hyperliquids of the world would just steal it.
It's a very different product because like the system required is going to be very different. we're like this is I would say like the distinction is fundamentally similar to how we perceive rates to be traded on a Pendle AMM and let's say like a spot asset on Uniswap, because the underlying that we're dealing with are just different. So the AMM, at least in the case of V2, is denominated very differently. So when we construct Boros, it's also like we have concepts that are inspired by futures and perp markets, but effectively we're dealing with very different products altogether, very different kind of asset altogether. So the construct would be very different from the current set of perp.
Interesting. And because we like, I know it's not a fair question, but how do you bridge the 40 to 80 million of OI throughout the year to like a $2 million revenue? Like, what's your mental math there?
I'm just thinking, even if we don't have any, like, let's say, like the trading activity, okay, so the 2 million was largely based on the fees that we extract from just having that OI in place. No frequent trading activities. So taking aside that swap fees.
Sorry, it's a take rate on the taker or the maker, plus the small take rate on the yield of whatever percentage, and then those combined maintained throughout the year. Okay. Well, it will be a good to bridge. I'm sure investors will ask about it later on. Like, you'll have to do a dashboard, I'm sure. Okay.
Yeah.
Okay. And then how do you fund your operations today? You have a big treasury. You sell tokens. How do you fund it?
Yeah. So we've been fairly lean. We raised some money in 2021 and 2023. Through OTC rounds, so we're still running on that. We will be turning on a fee switch for Pendle V2 when Boros goes live. So that means instead of distributing 100% of the fees back to VE Pendle holders, we will be extracting 10% for team operation and then 10% for ecosystem growth. That should allow us to be sustainable already.
Got it. Okay, very cool. So whatever number I have projecting forward, like 30 going to 50 to 60 plus 2, I'll multiply it by 0.8 or something. That'll be what's going to be Pendle. Okay.
Yeah,
makes sense. Very good. I don't have any other questions unless members you do. Let us give you 3 seconds. I don't think there are any. Well, Tian, thank you so much for your time. This is really helpful. Pretty exciting.
Yeah. Thanks for having me. Thank you.
Thank you.